So, good day. My name is Deborah Joe Sherard, and I'm an independent mortgage broker with Expert Home Lending. We are with Ricardo Sherard, also a mortgage broker with Expert Home Lending, and my son, as well as one of our realtor partners, Jonathan Lis from Keller Williams.
Well, hey guys, welcome to the show today. Hope you guys had a great day. Thanks for tuning in. We appreciate it. And we hope to bring value to tonight's show so you guys could replay this, learn from it, and take whatever applies to you and your journey.
Absolutely. That's what we come here to do, to bring value, and any questions that you may have, hopefully we can cover everything on this podcast.
So, in February of this year, 2025, Ricardo and Jonathan had a borrower, and they were looking, and they did get a contract that was accepted for a two-family in Jersey City, New Jersey. And they are going to just talk about from the time of the acceptance to the time of closing. So if you'd like to start, perhaps.
Okay, so
Or maybe with Jonathan starting, perhaps, talking about perhaps him becoming his lender.
Yeah, so our relationship with Ricardo started back in March or what, 2024?
March 2024.
It was 2024. So we connected on Instagram, and we just started building the relationship. I have a group of partners with other lenders as well. However, when this opportunity came for the multifamily in Jersey City, Ricardo was only one of the only lenders who had the 3% seller's concession, which worked for my buyer at the time. So I connected them, and this journey started around October of 2024, which we got our offer accepted. What was it, November? It was before Thanksgiving.
2 days, November 26th.
Okay, so about a month when the first point of contact led to finally them having a conversation, getting them pre-approved right before the holidays, which is really a prime time and a prime when buyers are looking during the holiday season, it really shows that they're motivated. So that can be a really good time to look for deals, since not everybody's looking, since people are occupied with the holidays, rightfully so. So we got the offer accepted right in Thanksgiving, and from that point on, it was a journey. It was a roller coaster, a lot of shifts and turns, but that comes with real estate. But do you have any input on that?
Oh yeah. So we me and Jonathan really bonded. We really bonded. Off of Instagram, and for any folks that are in real estate, it's all about relationship. It's not how many years of experience. No, not so much how much you know, but it's just that experience and just that just how you could work together. And him and I bonded. We both love basketball. I mean, heard he's pretty good. I'm okay. I'm more, but yeah, we bonded over basketball, and we just kept the relationship going, just talking, just liking each other on Instagram. We both just kept active on Instagram, and I just feel like now, if you do, I would encourage every real estate professional to, even if you're not strong with social media, please get it. That will help your business tremendously. So yeah, so we kept this this relationship going for a while, and we would talk periodically, like once a week on Instagram, call each other, and or be like, hey, did you see the Pacers play the Knicks? You saw how horrible the Knicks looked, this and that, So yeah, we kept that relationship going, and then once I think that August is like, hey, Ricardo, I got something for you. I was like, oh, okay. And then so it was like this person is looking for a 3-family in Jersey City. So I was like, okay, I would love to work with him. And I think I was that October finally his client reached out to me and says, okay, I'm ready to pull the trigger. Let's get going. So we started filling out the application. He filled it out. There's some things we had to work on, as far as, what he could be pre-approved for, and the steps he needs to take to get there. So we did that. And so it took us a while. And then as I was on the way to the gym, I was like, okay, instead of a 3-family, let's look at a 2-family. And we found this place in Jersey City. And so we're going back and forth. And what helped us at the time is that this person only had $30,000, at the time. So I was like, okay, let's see how we could work this. And
For the down payment.
yeah, for the down payment. And what people don't know is that that okay, if you're limited on funds, that's okay, because there's other avenues that you can get some help. There is help out there. One is our group has a down payment assistance programs, but another thing that is to the buyer's advantage is seller's concessions. What seller's concessions is that the seller will agree to pay up to a certain percentage of the closing costs and prepaids to help to help them with the transaction. So under FHA, I think the seller's concessions is up to 6%. For conventional, it's up to 4%, right?
Correct.
So we were able to kind of work out the deal, and what worked for us is this particular property was on the market for 72 days. So we kind of had something, because the price went down. When I looked online, the price went down like 51,000 or something.
Yeah.
So we first gave the offer 1,000 over. It was like 600,000, 4% seller's concession. Jonathan gave the offer. Seller wasn't too happy. So the seller's agent got back to me, who I reached out to, and say, hey, what's the highest you can go? So with that, before we give a pre-approval, we do what we call desktop underwriting. So with a lot of deals fall through is because the buyer can't perform when it goes to underwriting. We try to avoid that ahead of time. Not only do we ask for the application, but we also ask for the pay stubs, W-2. We always ask for that ahead of time so we can get a true number.
And get ahead of any what they call conditions in underwriting.
Yes. So with doing a desktop underwriting and all that sort of stuff, they were like, okay, what's the highest you can go? And when I did work the numbers, they were saying, oh, we can go up to 675,000. Do 650, you'll be okay. We'll get the deal. So we gave the offer for 650,000, 4% seller's concessions, and we got it. We got the offer accepted, and
Submitted the application.
The
loan went through underwriting. There were some conditions that did have to be
There were
met.
certain things that, like fixing up basically any debts that they had
Correct.
to pay off. So then their credit report reflected that
Right.
30 days after, because we closed around February.
Mm-hmm.
So the journey started from November to February.
Yeah.
We were supposed to close in 30 days.
Yes.
But since it was an FHA loan, FHA loans have certain requirements,
Mm-hmm.
and there was a few things that had to get
Yes.
completed before that. So we couldn't close without those requirements, being that it wouldn't go through with an FHA loan. If we did conventional, there's more wiggle room with that.
Correct.
But like I said, it was an FHA loan, so that pushed the closing date back. Not only that, it was the holiday season around Hanukkah. I know the seller celebrated that,
Okay.
and then they were traveling to. There was a time where we had to verify the tax code that it was taxable as a 2-family, not a 1-family.
That's correct.
So there was an issue with
Oh,
that.
that's right. I forgot about that. Yeah.
We had an attorney
With
in
permits.
that process.
Yeah, with the permits.
Yeah, that's a
Yes.
huge thing, especially
Yes.
in Jersey City.
Oh yeah.
I'm working with another. I worked with another buyer,
Okay.
and they're flipping it right now. They're renovating, so that's
Okay.
going to be coming to the market in a few months.
Oh, okay.
Jersey City permits. If you're watching and you're from Jersey City, I apologize, but the permits they're very strict.
Yes.
So if you're interested in Jersey City, just be mindful of that.
Yes.
But back to this one certain scenario, we had that whole process go through. Ricardo mentioned with the underwriting, it's so important to work with a good, trusted lender, because getting your offer accepted is the first part of the game. Then you're going to have your inspection period, which, depending on how the property is, how like you want to structure your offer? Do you want to be like picnicking with like the small things, or
Right.
are we just sticking with the structural, mechanical, and hazardous things of the property? Depending on what route you go with that. I lost my train of thought. I forgot where I was going with that.
Yeah, but like you were saying, like, you know, the FHA inspection.
Yes.
So basically what that is, and I'll let you get back. So with the FHA inspections, I'm trying to be careful how I word it, but a lot of sellers try to avoid it. Not because there's so much looking down, oh, it's FHA, they can't afford it. No, because the FHA really looks out for the interest of the buyer to
Yes.
make sure
Right.
that basically everything that is in the house is working as it's supposed to.
And the reason for that is because they're government
Back loans. So the government's
So
going
it's-
to want their money.
Yeah, so they want to make sure that it's there. But for the buyers, it is a good, for the borrower, it is a good way to go for the inspections. But keep in mind with the FHA doing that is you're putting down less,
Yes.
3.5%. But unfortunately, even with conventional, if you only put down 5%, you're still not avoiding what we call private mortgage insurance. And though it is a myth that you have to have 20% down to buy a house, the issue is though you're going to have private mortgage insurance. But
Yep.
there are ways that, you know, over time that you can, you know, you can pay that off.
Yeah.
And you want to make sure that you're with a lender that, you know, you don't have any prepayment
Penalty.
penalties, especially once
Work
it
with
comes to that
these
size.
lenders.
Yes, thank you.
Thank
Thank
you.
you. So I just wanted to just throw that out there for folks that FHA is not a bad thing, sellers. It really isn't. But you want to make sure that you want to make sure your offers accepted. And if you can avoid these things ahead of time that you know that are going to be problematic, we would have no problem as the lender talking to you, the seller, about, you know, what are some of the possible conditions with a, you know, FHA loan. Now, that's not to say that conventionals, they're just going to accept anything with with the inspection. Now, remember, then the inspectors you have FHA inspectors and you have conventional inspectors. They're not the same thing. They're training everything. It's the same thing with appraisal. Appraisers, the same thing. You have FHA appraisers, which I thought was crazy. But I do understand, you know, because there's certain things that they're looking for.
Two different ballgames.
Yes. So, you know, it's just a lot of, those are just things just to keep in mind.
Another thing, if you guys are also interested in FHA loans, you guys have to be mindful that when they do an appraisal with a FHA loan, that appraisal stays with that property for the next 3 to 4 months.
Correct.
Is it
Yes.
3 months? Is it only 3 months?
It
or
might
4?
be 3 months, yes.
Something like that. So
Yes.
if it appraises low,
Yes.
mind my French, you guys are screwed. But if it appraises right, then you have nothing to worry about. But that's definitely something to be mindful of.
And
when
Jonathan, you were actually mentioning that, you know, when we made that offer,
Ooh.
because you were saying, like, you know, like we got to make sure that it praises the way it's supposed to, because you kept emphasizing that. But now, since you explained that, like, you know, it stays after 3 months, but thankfully it appraised higher than our offer. So yeah.
But remember, another thing, the appraisal, the price of the house is one thing, but if you're buying a multifamily, the rental income also has to appraise too. So
Yes.
be mindful of that as
Yes.
well.
So,
If you're
I almost
working,
forgot about that.
if you're working with a realtor, make sure that they run their comps on the rentals
Rental, yes.
of the area. If you guys are going to multifamily, if you guys are
Correct.
going single family, if you're living in it, different
that's
story.
fine.
But just to be, yeah.
but with that said, is also it's always good to we take in consideration your affordability for a house based on the rental income.
Yes.
So let's say your mortgage maybe is like $4,000 on a two-family. You may be able to maybe bring in $2,000, maybe a little bit more, which will help offset your mortgage payment, and it offsets your debt to income. So without that, if you were buying a single family, your debt to income might be over 55%, which is the maximum for FHA, where if you have that rental income coming, it might bring it down to, I don't know, 50% or something like that, which was great. So it allows you to perhaps get a higher pre-approval
Yep.
amount.
But yeah, that's what helped us was the rental income.
Mm-hmm.
But we came across some stumbling blocks as far as like, because we were thinking we could get 2,500, but the rental income came back lower.
Okay.
So and also we had to write letter to prove that, that because whenever you could have up to four people on the deed.
Right.
Now, for the multifamily, if one of the people on the deed are non-occupied borrowers, that minimum down payment goes from 3.5% to 15%. So we had
something to
so
keep
we
in
had
mind,
to
yes.
prove that. We had to write a letter to say, hey, all three of them are going to be living in this in this unit.
Yeah.
So that's what we have to do. We had to prove that, because that's a huge jump from 3.5% to 15%. So yeah,
Makes a huge difference.
Yes. Keep
Big time.
yes. And that is something that unfortunately a lot of lenders don't present when they're making that offer in multifamilies. Yeah. But at the same time, because when now you're jumping to 15% when you have multiple borrowers on there, and they're not going to be occupying, now you're running into the investor loans, because we have investor loans as low as 15%.
Oh, you guys do?
Yeah.
Okay.
And which is not bad, because it used to be 25, 20, 25, and even 30, but now they've dropped as low as 15%. So I tell people when they're looking at multifamily, you are actually an investor, because but the only difference is you're occupying one unit and you're renting out the other. So it's a really good thing, because now it allows you to jump off to an investment. So let's say you only have to stay in the unit for 1 year.
Yeah.
I mean, in the building for 1 year. And so now you can either sell it and go buy your single family if you want, or what I tell people is, instead of selling it, take out the equity after a year and use it to purchase a new place. Now, the only thing is, I would move in the new place so you can still get the same rate.
Gotcha.
So, because if you don't, now you're in the investment realm, and you're going to be paying anywhere between 15 and 25%.
Yeah, the hard money loans.
Yes. Yeah. Well, they're not really hard money
but
loans.
like
They're
just a higher
commercial.
interest
Yeah,
rate,
the higher
commercial.
interest rate and more of a down payment. But they don't look at your debt to income, which is
Yeah,
nice.
They just go based off like the
Yep.
amount of income.
Yep, that's it. The income and your credit score.
Yeah, commercial's a different ball game,
Yes,
guys.
yes. And that's something that we are now starting
are
to
going
delve
into?
into. Yes,
Okay.
yes. So keep your commercial people.
No, I have contacts in that. They do a lot of off market stuff.
Oh.
I have an accountant. Shout out to Shaw, yeah.
Okay, all right.
Yeah.
Okay. So you want to finish with that, because we're not to the end yet.
Oh.
So we're at the
Well, there's
the letter for the
yeah. So we completed that, and so we talked about the inspection.
Mhm.
We talked about
the appraisal,
which was successful.
the letter to show that,
The letter and
all three of them are occupying.
and also with title,
Oh, that's right.
because
The title search.
yeah, with the
I forgot
title
about that.
search, one of the people on the title, they're
Side, on the seller side.
on the no, I thought it was on the buyer.
No, that would be
That was the seller side.
that would be on the seller
Seller
side.
No,
They're
because
just-
they were accused of saying that they had they were involved like a tax lien. There was like a tax.
No, that was the seller.
That was
was
the
the
seller.
seller.
Because you
Yes.
cannot transfer a property without like any
Yes.
liens like being taken care
Correct.
of. So
Yes.
yeah, that was on their part.
Yes.
Yeah, yes. So that's the seller. So yeah, so we had to
So they had to
That was another
resolve
waiting
that.
period too.
Yeah.
yeah.
Yeah. So the sellers had to resolve that with their attorneys or the realtors
Yeah.
or the tax, whatever. I don't know. We didn't have anything to do with that.
Yeah, we didn't have any like touch point with that. It was just a negotiation with the
Mm-hmm.
other side.
But it really wasn't that long. I thought it was going to be lengthy. I didn't
Yeah,
think
I
it was
think it
that
took
long.
like a week or a few
Yeah,
days.
it wasn't. It
No,
really
no,
wasn't.
not even a week. Not even a week.
Yeah, it wasn't bad.
Yeah, shout out to Earl. He was a great attorney during this
Earl was great.
Yes,
transaction.
yeah.
Earl and Luis. Luis was good.
He was the lending agent.
No,
listing agent.
the other title. The other
Oh, Luis, yeah.
Oh, okay.
We had Carnegie Title. Shout
Okay.
out to Carnegie Title.
Carnegie title.
Okay,
Yeah, he was
okay,
good.
okay.
Yeah, but yeah. So yeah, so we got towards the end, and so what we were doing is when we tried to get the deal to work, what we try to do is for the amount to closing, we try to when we look at all the debt to income ratio, we put down, okay, this is the amount that needs to be paid at closing, and then this loan could work.
Right.
But then what we were finding is the cash to close was higher than anticipated, and
What did you guys do to fix that? How did
So-
you help?
So actually, we helped to do that is, and this is a little weird to talk about it. So we had a lot of unused. So when you use up all the seller's concessions, because the seller's concessions, yes, you can get a big amount because the seller's concessions we got, it was so the purchase price was $650,000.
And you got 4% of that?
Yeah, which is 26,000.
Mm-hmm.
So we were able to pay all that we were supposed to pay, all the prepaids and the closing costs. So we had a lot left over. So whatever seller's concessions is left over, it's called a principal reduction.
Mm-hmm.
So which kind of unfortunately adds on to the debt. So we had an issue with that. So what we did is we decided to not pay off that one of the credit cards. We actually use that excess seller's concessions and actually use it to buy down their rate.
Great. Yes.
And because the rate was at 5.99, when we bought down the rate, we were actually able, because we had to come up with another 12,000 at closing. But in all reality, when we bought down the rate, it got it from 5.99% to 5.866, and that the remaining cash to close went from 12,000 to 4,200.
Yes.
So yeah, shout out to my team. Shout out.
Yeah.
Should I shout out his name?
No.
Yeah, but yeah, shout out to my team lead
Yes.
on that. Yeah. Yeah. So yeah, I was working on that late at night till 1 a.m.
Yes, we were.
And then called the buyer at 8:30 in the morning, like I said I would. He wanted to speak to me first thing, and we just
Well, I think also, if I remember correctly, the night before it was you, Jonathan, your borrower,
Yeah.
and our lender going through that, and that was after 8:00 p.m.
Yeah, because that was I think that was one of the days we did the final walkthrough.
Yes.
And then we just had to make sure that all the
Everything.
numbers aligned.
Yes.
yeah.
Yeah. So that was something.
Yeah, that was.
Because usually we don't do those types of things.
Yeah.
I'll put it this way: usually your retail lenders,
Yeah, they don't do it.
they're closing at 5:00, whereas the wholesale lenders, we are 24/7.
And that's a perk, especially when it comes down. Once you guys enter once your offer is accepted, that's when the real game starts. Because
Yes.
from there to closing, the main job of the realtor and the lender,
Is-
and not only that, the team that they bring on with you during this journey, during the whole transaction, we're here to bring you to closing. Because there's times when deals just fall apart, and we're here to make sure that the deal goes through. So when you have lenders like these two that are there 24/7, especially when it's crunch time, fourth quarter,
Yeah.
and they show up, they get the deal done, and you guys are in your home, and you guys get to start building that American dream, having stability for you and your family to pass that property on to the next generation when they come.
Yeah.
And I'll tell you, when you talk about crunch time, because I had not, and this was, now keep in mind, this is Ricardo's first year, and this was actually his first transaction.
He was
and,
telling
and
me
I'm
out
like,
there.
oh my gosh. And I thought, so that's why I really, as the team leader, I made sure that
That he was-
even though I'm not originating the loan, I was walking him through it. I said, because you can't let this go. I said, we're
Yeah.
too close now. I said, there is a way that we can fix this. And that's why we had our lender on the phone, and he was able to, he goes, well, if we buy down the loan, it will cut down the closing costs.
And that's the most
what happened.
important
Yes,
thing.
yes.
And this was the so this was like the first one.
That I did solo, because usually I partner with my godfather.
Okay.
So I have him oversee. I came in the real estate game in 2021.
Okay.
So then from there to 2024, it was more so having
Oh,
him
wow.
oversee me.
Okay.
And then I started just taking on my own clients, just working by myself. So then that was the first solo that I did. But I knew what I was doing. I guided it. We took it home.
Yes.
I'm glad he had a support system
Yes.
during that time because that was crazy. I was like, hey, man, I remember I called him after. I was like, yo, we're right here. And not only that, our buyer, they were first-time home buyers, so that was very huge for him.
For them, yeah.
And-
Only 24 years old.
Yeah, that's all we can disclose. I
Wow.
got you, my boy. I'm
Yeah.
not-
Yes, yes.
No, yeah, but yeah, we won't disclose anything else
No.
besides that. But yeah, young kid got his home. Like, family was definitely proud. It was very big for them. And
Yeah,
they're
yeah,
very grateful.
but it's just like, you know, like to all of our folks, like, you know, in the real estate game, like, you know, this is, and essentially two novices that, you know, that never met each other. Like, just, we worked hard through Instagram, just trying to build our network, and we just leaned on each other, support each other, and just really just fought to the end, you know, to make this happen, you know.
But then, you know, then it goes back to that whole generational wealth where you're talking about a young person who's coming in, and so to say that you can't do it, yes, you can.
Yeah.
One of the things I tell people all the time when I hear about these astronomical rents that people are paying, and I say, you know, when you're paying $3,000, $3,500, you
You
know,
might as well get a
45,
mortgage.
5,000, which is pretty normal in the Jersey City area, and
Yeah.
Hoboken and whatnot, is you might as well. And, you know, I will get feedback like, but I'm not paying property taxes. Yes, you are. It's being passed through
Yeah.
on your rent. So let's have these conversations. Yes, if you have an emergency, you can take equity out of your house. If you have an emergency as a renter, you're putting it on your
Yeah.
credit card. If
or,
you have,
or if you have your emergency savings, stuff
say,
like that.
yeah, you know, so there's nothing that you're building. So for first-time home buyers, one of the recommendations that I make a lot is look at a multifamily, look at a duplex.
Yeah.
You just have to put down 3.5% if you are going to be the sole occupy, you know,
Yeah.
and you're not going to have any co-borrowers on there. And, you know, you do that, you're starting to build your equity. You stay in there for a year, and, you know, it really helps you out.
Not only that, you see the numbers with renters, like the average net worth between a renter and a homeowner. There's
Yes.
a huge difference.
Well,
Well,
I'm not so sure because
it's
right now, it's
180,000?
from what I'm seeing now is that in order to rent, so if the rent is $3,000 a month,
I don't know,
you
3
have to
times?
have either 2 to 3, and now I'm hearing 3 times. I thought it was
Yeah.
only 2, 3 times the amount. So if it's $3,000 a month, I have to have 3 times the amount of monthly income. That's $9,000. So
Yeah.
now you're talking about over 100. What is it? 114, something like that.
About what are
It's
the
not
numbers?
quite 120. It's getting there. But anyway, you're talking about having a yearly annual salary of $100,000. That is a lot of money for people,
Just to
folks,
pay,
depending
like,
on
for
what
the
your
year.
skill and what your job is.
Yeah.
Right? And on top of that, you have to be in that position for a minimum of two years making
Taxable
that
income.
salary. So there are a lot of things. So when people tell me that they're in these apartments, I said, oh, so then you met the income of what the landlord's looking for. Then let's talk about you getting
Yeah,
your
because a
own
lot
home.
of people don't think that they could afford it, but it always depends on the person's situation. And do you guys see yourself living in that like certain state? Because there's some people that like that nomad life, that like to travel out, like
Okay.
out and move every 6 months, 3 months.
Mm-hmm.
But the thing I always like to think about is always like to the long term game, because you know some people say I like to live here. You know, I'm here for a good time, not a long time. But you know, one day you're gonna be 80 years old, 85. Like you're gonna need a place to live. Like you don't want to just have to pay somebody else's rent. You would rather have like stability, own a spot. So I always like to think that I pass that on to my clients. To always think about the long term game.
Mm-hmm.
You may not get into real estate now, but at some point in your future, you may want to consider it if you think about building a family or just having like a nest egg for yourself
Yeah.
and passing it on.
Yeah. But also is, you know, you want to make sure that you have that ability to pay.
Yeah.
Now, when you're getting to 65 and everything, most people are retiring.
Yeah, Social
So
Security
now,
and stuff like that.
what is that retirement going to look like? You know, they're talking about Social Security may not be solvent, and what is it, 20, 30, something, I don't know. But what are you going to do as far as income if
Yeah.
you don't have a pension or you don't have some type of, you know, savings?
Yeah, or investment portfolio.
So many positions right now, depending if you're not in education or in medicine, you really don't have either a 401k
Oh, yeah.
or some kind of pension fund. So, you know, what do? You know, annuity.
Yeah.
So you either, you start your pension fund or an IRA or something when you're in your 20s and hope you keep building on it.
Yes,
You
yeah,
know?
like
But
compound
unfortunately,
interest.
I tell people, I said those 401ks though are tied to the stock market.
Yep.
So that can be problematic too.
Yeah, because it goes up and down.
Yes.
It fluctuates. So
And you have no control over that.
yeah,
you know
don't.
so there's that piece too. So I try to tell people, don't wait. You get out there, and I said, and you have to have a lender. They're going to tell you. So I have people really ambitious. Oh, I see this new construction, I want it. It's $500,000, but they don't make the salary. And I said, so I'm not gonna. I can
Yeah.
pre-approve anybody, but once it gets to underwriting, it's not happening.
Yeah. And then you just wasted like all that time. leading up
Everybody's
to
time,
it, yeah.
so let's not do that. So let's be reasonable. Your first house doesn't have to be your forever house.
Yeah. Because then you get the equity and you can sell it, keep it for a few years, so you have that capital gains to favor you. Because if you sell it too short, you have to pay those short-term capital gains.
Yes.
And that could be hefty. So
Yeah. Yeah. The other thing is, as a realtor now, do you see this as a buyer's market?
with right now, no. In this Jersey area,
Why is that?
homes are still selling at 100% list price. There are negotiations going back and forth, but things are still going over asking.
So I didn't mean it about that. I meant it as far as inventory, though.
Inventory, no.
Because
Well, it's starting to pick up a
Yeah.
little bit.
So what we're seeing is, from what we have something called Mortgage News Daily, is that we're seeing that there are more sellers across
Yeah.
the United States than buyers.
Yeah, across
So
the
that's why,
US.
so that's why I call it a buyer's market. But what I'm seeing in New Jersey, especially in the northern part, not so much in central and south Jersey, which is a
Yeah.
completely different
Different
market
ballgame, yeah.
than here, is that they're staying on the market
A
longer.
little bit longer, like 35 to 45
Yes, which is
days.
highly unusual. Usually
Yeah.
it's 2 weeks, and you're getting those bidding wars. So I'm not seeing that. So this is
It
interesting.
depends, yeah. There was a property with another buyers, that came on the market, I think, on a Tuesday. Open house that weekend. Sold for over asking. I can't disclose the price.
No,
but
that's okay. Yeah.
What was this? Is $650?
Yes, yeah.
When-
But
yeah.
what I'm saying, it depends on what the house is.
Yeah.
And the other thing you see is you have a lot of cash buyers.
Yes.
Now, I don't know who these people are, but I want to be one of them. But I'm just saying, so you see a lot of that. So that sort of sort of pushes those other buyers out of the way, because
Yeah.
cash is always going to be king.
Yep, especially when it comes to real estate.
Yes. And a lot of those cash buyers are not paying the price. So let's say it's $650. They'll say, I'll pay you $600 cash. Sellers are usually going to take
Just
that
take that.
because they don't have to worry about title. They don't have to pay inspection. It's as it.
Yeah.
Wash your hands
Be a
and
quick
keep it.
close
Yes,
to 30
don't have to worry
days.
about appraisals. Let's go.
Yeah.
And you can do that. And that was one of the things we pride ourselves as independent mortgage brokers, that we can close in less than 15 days.
Yeah, that works for some people, but it's
Mm-hmm.
always good. That's always a good perk to have.
Especially if people have to move for whatever reason.
Yes.
Another thing that we do is not so much bridge loans, but if you're in a home and you're looking to purchase another home, we have it set up that if you can buy that other home and close, let's say in August, and you were not going to be selling your other home is not going to sell yet, but you have 30 days from your current close
Current close.
to sell on the other one.
Okay.
And what that does is we take it off from your debt to income. So it doesn't show
Okay.
that you're carrying two mortgages.
Gotcha.
Yes.
Yeah, that very helps, especially when
Yes.
it comes to underwriting
Yes.
that process.
So only thing that we ask for is that we see the purchase agreement.
Purchase agreement. Okay.
For
so
the
they
house,
have
there's this-
so they have to have their offer accepted.
Yes.
Going into okay.
Yes. Even
All
though
right.
it may not close at the same time. Closing
Yeah.
at the same time would be nice.
Yeah.
But
Ideally, but
yes.
that is a good perk to have.
Yeah.
Because then it gives that leeway.
Yeah, and it's nice because now you're avoiding the bridge loans. Bridge loans are very expensive.
Yeah.
But at the same time, it gives people that flexibility to carry their other mortgage and get a new one.
Yeah, and then
Yes.
once when the other closes, they're
Yes.
able to take those proceeds and then
Correct.
by the time
Yes.
be there just in time to pay for the next place.
Right. Yes. Yes.
That's good.
Yes.
It gives them time. Is there like there's no interest rate. Oh no, there's no interest rate on that because it's like the 30-day
Correct.
waived period.
Yes. Where the bridge loan, you have an interest rate and it's
Yeah.
high.
Yeah, you never want to pay interest.
Yeah,
on it.
it's high. So just, I tell people that, especially with new construction. So you will
Yeah.
see, because I see a lot of new construction here in Bergen County.
Yeah, especially Bergen County prices are what, average price like 950,000. Things are going up there, so
Yes.
yeah.
But the people are there.
Yeah, it's a good county, good area.
Yes, I
Very.
like it. Yeah,
Very desirable.
yes,
A lot of great school systems.
yes.
But back with
Our client. So where we're at now, update on,
yeah, so once when it closed, being first-time home buyers, second floor was vacant. So people in the real estate, landlords out there, you never want your rental vacant. At the same time, you always want a good tenant, especially with the New Jersey laws. You don't want to squatter there. So once we closed, it took about a month and a half. We vetted over like 30 different people to see. Yeah, it was like 30, 35 different
Oh my gosh.
qualifiers for the spot. And we came across one person that I had a feeling the type of person that would want to live there. And being that it's in Jersey City, it's close to New York, I
Yes.
suspected that somebody from New York would move to Jersey City.
good.
My intuition was correct there. So we had a New York renter move to this area just in time. So we got that closed around, I think it was March. No, it was April.
Oh, okay.
So they
Okay.
had like,
2 months. And
yeah, about 2 months. So they
Yeah.
had to pay the mortgage. That was
Yeah.
a challenge because, landlords, I understand, it's very stressful because you don't want to pay the full mortgage by yourself.
Yes.
That's a headache.
Yes.
So we worked tirelessly, my team and I, with my assistants. We were able to vet it. We got everything closed. We made it affordable for both sides, because you have the broker fee, payments like that.
Right.
Both the landlord and the tenant, it was a good relationship. So I'm glad we got people matched up together, because the last thing, especially in this business, I would never want to put a tenant with a landlord and that relationship turns out bad, because that's my reputation on the line. So I take pride in vetting people and going through a whole vigorous interview process to make sure that we connect the right people together.
So do you run credit reports on
Yes.
renters? I was
So
wondering.
typically we do a background check, but then I always tell the renters it's up to them. But if you want to make your application strong when applying to a rental spot, we ask for your taxable, your previous W-2 forms from
Yeah.
last year. We like to see your bank statements.
Yeah.
3 months, 3 months is pretty good. And then we would like to see 2 pay stubs, 2 recent pay stubs, as well as your driver's license, just for identity purposes, so there's no fraud there. And we take that application. Sometimes there's a lot of landlords like to see like the NTN report, and you guys hear NTN report. If you guys don't know what that is, it's essentially a credit report for your tenant history. So when they see that, it has the background check as well as like credit aspects. They like to see that. And when I get an offer, I present it to my landlord, and then from there, depending on the travel circumstances for both parties, we either set it up on a Zoom call or we meet in person. Because I always think it's important to meet people in person to
Yes.
see if you guys are gonna vibe, because you guys are gonna be living near each other.
Next to each other, yeah.
So you guys have to like each other. You guys don't have to love each other, but you guys got to be cordial. So
Right.
I always take that extra step to make sure that you guys are good, and it works pretty fairly.
Fantastic. How long so they just moved in and what,
So
May?
they moved in April. So the lease,
Oh, April, okay.
the lease is good until December.
Oh, okay.
So then from there, they'll have to decide if they want to renew,
Renew. Okay.
or
Oh,
they would like
fantastic.
move on. Yeah.
Oh, okay. So the landlord will give him notification, what, 30 to 60 days?
Yeah,
as far
30,
as
60 days, or even 90 days.
To
It's always
renew?
it's always good. I'll
Okay.
check in with them to remind them, be like, hey, just ask what are their plans.
Yeah.
It's always good. You have a realtor always reminding you, because that's what they're there for. They're here for the service, educate you on the real estate side, so you could keep your mind space focused on your career and also your family life. Because at the end of the day, you're getting into real estate to have some freedom. But when I say that, it's kind of a paradox, because a landlord, it's like having another job.
Yes.
However, time management is a huge thing. You still can have both. You can have freedom and time with your family, and you can also have this financial asset that's going to provide stability, have some cash flow. Yes, you got to pay property taxes. Yes, you have your maintenance costs. Yes, you have all these things. But remember, the main thing with real estate is it's gonna benefit you with your tax liability. It's gonna deduct a lot of your taxable income because there's a difference between your gross income and your taxable income.
Correct.
So, yeah.
Yes.
Do you guys have anything to add there? I don't want to go on a rant.
Oh, that's good. That's why we have you here. We're talking about it from the mortgage side and talking about it from the realtor side. So it's interesting how we're coming together, for the first time, and just how our journey is crossed together to make this happen, to help a lot of people, to make their home buying dreams come true. Even though, unfortunately, a lot of people feel that it's very far away, but it's actually pretty close for them.
Yeah, it can happen real quick. I remember the buyer, not disclosing the name, but he was like, "Wow, like we're really here." Because
Yes.
honestly,
It was quick.
Yeah.
Once he filled out the application,
Yeah.
everything started moving.
Yeah, that was intense.
Yeah.
That was like a 2-year process because I remember I first had my interaction.
With him. Oh, so
yeah.
you had a year ahead of him, though.
Yeah,
Before
like a
you-
year and a
you
half. Because he
talked to
mentioned, I was
Ricardo.
like, hey, like, you just got to get these things, save money for a down payment. He was working through his career and stuff. And he followed the course that I gave him. And then that's when we came on to the next step where he has the pre-approval before we go to do the showings.
Right.
And obviously that's when Ricardo connected with him.
Yes.
And then the rest is history.
Yes.
Yeah, I mean, it's like this, real estate is a great career to get into, but people think it's, quick. But yes, you'll be successful, but it's a long-term game. Just not even just like prepare, like buyers preparing to get their the steps, and not just financial, but just doing everything in the correct time, and knowing what to do and when to do it, and it's all a long-term game. Even relationships between him and I, it took us, close to a year to get this, so like, and it's all about just what are you doing every day to put yourself in position. I get up every day in the morning. My kids usually, I got 2 kids, so my kids usually wake up around 7:30. So in the morning, like 5:30 or 6, I go to the park, run and jog 2 miles a day, and I do push-ups and sit-ups, and I feel like that mentally keeps me strong. And then when I get home, I just mentally just plan out my day. Okay, like 9 to 10:30, I'm gonna go on social media, follow up with people. From 11 to 12, I'm gonna follow up with past clients, or follow up with if they're eligible for maybe. After 6 months, a refinance, I could just call, check on them, see how they're doing, and just different things, just every day, just being consistent, and that's all there is. And I know, Jonathan, you take pride in that, just a mindset and just keeping yourself just focused, and I know you're big into that,
Yeah, everything. I like to say soul, mind, body. So when you get up, you just got to take care of yourself first so you can show up for the world. Because if you don't pour into your cup, you can't pour into others. You can't pour in from an empty cup. So you always got to take care of that. But a new thing that I just started coming up with is soul, mind, body, and pockets. Because, you need money in this world to live.
Okay.
So,
Yeah.
just take care of those 4 things. Family is the most important thing. Love on your people. And then at the end of the day, the reason why I'm in real estate is always to provide a great service to people, because life is bigger than yourself. It's always about the impact that you give to other people, and you always want to I was taught that you want to leave the world a better place than when you showed up. Yeah.
Correct.
Not only that, karma's everything. So
Oh, yes.
when you see other people, I have my faith in God, and it's you're here as a human being, you might as well treat other people good, because what happens if you're on the other side? People don't think about that, but it's always good to see things from every person's perspective. Doesn't mean you have to agree with people, but just know that the other person on the other side is human, and that should account for something.
Well, I want to thank you. This was very informative, I hope, for myself, but I also hope for our listeners out there. So if you want to get in touch and looking to buy a home, you can contact Jonathan Lis at...
Yeah, you could contact me at 973-391-5732, or follow me on the socials, Instagram, TikTok, you name it, at the realtor John A at TheRealtorJohn _. I'll see you guys there.
And you can contact me at you can call or text me 848-702-1808. And if you want to follow me on Instagram, it's Ricardo RICARDO _ the lender. And I'm more than happy to help you.
And if you want to contact me as the team lead for Expert Home Lending, my name is Deborah Joe Sherard. You can contact me on Instagram at mortgages_Deborah mortgages_by_Deborah for Mortgages by Deborah. So again, I want to thank you, Jonathan, for being our guest in episode 2. And
Thank you for having me. It was a
You're welcome.
pleasure.
thank you.
See you guys.
All right.
Oh.